Want to buy a house in 2022? You need to do these 5 things right now. Welcome back. This is Robert C. Baker with Move to Chattanooga and Crye-Leike Realtors. You know, a number of folks have put off home buying due to low inventory and higher prices. But there are other folks who are taking a break during the holidays and they'll start shopping for a home again in 2022. If that's you, be sure to watch this video all the way to the end because these 5 things may help you buy a home in 2022. And kindly hit that like button. Let's get started. Number 1, watch your spending over the holidays. One factor affecting your ability to get a loan is your debt-to-income ratio. To calculate your debt-to-income ratio, simply divide the sum of your monthly debt obligations like your car payment, student loan payment, minimum credit card payment, and rent by your gross monthly income. Please be aware that there are a number of debt-to-income or DTI ratio calculators available online, and quite a few of these operate with old-school lending standards. Some of them may even suggest that you can't get a mortgage loan if you have a DTI of 36% or above. Now, if you have 36% or below, that's great. But mortgage lenders will lend at higher DTI ratios than that. Keep in mind it's the mortgage agencies like Fannie Mae, Freddie Mac, VA, and FHA that set the guidelines, not the lenders. Generally speaking, you're looking at USDA and VA loans at 41%, conventional loans at 45%, and FHA loans at 50%, although in your particular situation, you may have a higher DTI limit. To find out what your DTI limit is for your particular loan product, contact your mortgage lender. Number 2, keep your credit card balances at 30% or below of your credit card limit and make your payments on time. Bear in mind that balances 30% or more of your credit card limit may have a negative impact on your credit score, and it may take 2 or 3 weeks for a credit card payment to show up on your credit report. Also keep in mind that your credit report is going to be run at least twice during the mortgage application process. Number 3, save your money. You know, a lot of folks receive a holiday bonus, and if your friends and family know that you're planning to purchase a home in 2022, you may receive a financial gift. There are always unanticipated expenses when you purchase a home, but in this very tight inventory situation with so few homes on the market, there may be some additional expenses you have to incur. For example, in this market, in order to get the home you love, you may have to cover your own closing costs, title-related expenses, and perhaps even the difference between the contract price and appraisal. So save your money so that you can make your best possible offer. Let me tell you a true story. I'm working with a client who also happens to be a friend who's been looking to purchase a home in St. Elmo, a really cool part of Chattanooga, for the past year. He recently made an offer on a newer home, and within 48 hours after listing, the seller had received a total of 4 offers. My client made a full price offer with no seller contributions, and he still didn't get it. In fact, as I was told, all of the offers were at or above asking price. In this highly competitive environment, a number of buyers are eliminating some, if not all, contingencies, although I never recommend to my clients that they eliminate the home inspection contingency. Heretofore in the greater Chattanooga area, it was typical for buyers to ask for 3% in seller concessions, as well as contributions towards title policy and search. But now we're even seeing those fall by the wayside, and in fact, some buyers are contributing towards sellers' closing costs. Again, this is a super competitive market. You need to have a good handle on your finances, and if you come into extra cash, hang on to it. Number 4, before you do anything else, get pre-qualified, preferably with a local lender. Actually, this is the first step in the home buying process. Get pre-qualified, that is, unless you're paying cash. Be prepared that it may take a couple of days to get all the necessary paperwork for your lender. Your lender may require W-2s, 1099s, previous year's tax filings, bank statements, pay stubs, and so on. Now, you certainly can get pre-qualified for a mortgage loan using an online lender in a couple of hours or less, but the reason that I suggest using a local lender is that my clients typically have a better experience using a local lender. If you choose to use a local lender, the pre-qualification process may take up to 2 weeks. Whomever you choose, make sure that your lender responds quickly to your requests. That's important when it comes to pre-qualification letters because sometimes the amount needs to be changed. And number 5, find your real estate agent. If getting pre-qualified is the first thing that you should do, the second thing you should do is choose your real estate agent. Sadly, the most frequent complaint against real estate agents is that they're not communicative. The truth is that you deserve someone who's responsive and attentive to your needs. That's why if you're my client, unless I'm otherwise engaged, I will immediately respond to your telephone call or text. Hey, don't go. I want you to watch this next.